Tax the rich is a popular slogan among the left. Taxing the wealthiest is actually quite well supported by Americans across political parties, although certainly less so by Republicans, although tax the rich is relatively popular overall. But taxing the rich is actually difficult if what we're talking about is collecting taxes from the rich. And what I mean by that is many of the methods proposed to tax the rich either wouldn't really tax the rich because the rich would find ways around them, or they would be completely impractical. So I'll explain. You raise income taxes. You say we're going to raise that top tax rate of on income from 36 to 39 to 42 to 50 to 60. Okay. Most of the very rich aren't earning their money through income, through wages. So they're not actually going to be impacted by an increase to the top income tax rate. They make a lot of money through capital gains. Okay, well, so then you say, well, let's raise capital gains. The rich making money from dividends and making money from money will have to pay if we increase the capital gains tax rate or tax capital gains as we do income. Okay, well, there's a way around that as well. The rich can choose not to realize the capital gains to avoid those taxes. They can wait around for the next president or the one after that to lower the tax rate on capital gains, or they can create charitable foundations which they control or use other mechanisms. Okay, well, you've got the estate tax for people who die with more than $1 million or $22 million for couples. There we've got them, right? Well, not really, because you can reduce tax liability there as well with all sorts of other mechanisms, including stepped up basis, Delaware dynasty trusts. I could go on and on. As a business owner, you can reduce taxable income by contributing to a defined benefit plan, and then you earn income from the plan, paying taxes on income later when your income may be lower, but reducing income taxes in the immediate. Okay, well, hold on. So then let's do a wealth tax. Let's tax people's assets, even unrealized gains on those assets. I've already explained why I think it's untenable, and some of you disagree with me. Many times for the very wealthy, net worth is tied up either in their business, in physical assets, in accounts receivable, in stocks with unrealized gains. You may not actually have the liquid assets to cover a wealth tax. And then imagine that you pay such a tax on stocks you haven't sold, and then next year the market crashes and you lose value in those stocks. Are you entitled to a refund on the net worth tax that you paid? As I've said before, I believe it's completely unfeasible. I think there's essentially no chance that what Elizabeth Warren is proposing on a wealth tax passes. And part of what I'm getting to here is something called the dynamic tax model. When you do a tax model and you score it, how much will we collect? You really should do it dynamically, meaning you account for how people's behavior will change based on the tax plan. So I'll give you an example. If right now we say, listen, if you look at people's income right now, if we were to raise the top marginal tax rate from 37% to 45%, we'd collect $200 billion. I'm just making these numbers up. That only holds if we assume nobody changes their behavior. But the truth is, if you announced the tax is changing from 37 to 45%, that top tax rate, many people subject to the top tax rate would reduce their income, take it in stock, deferred compensation, move personal expenses to business expenses, etc. So you need to score these proposals dynamically to account for changes in behavior. And when you do that, you realize that the actual government revenue change from a lot of these proposals is much smaller than what we might immediately imagine. Okay, great. So these are all the problems. How do we actually collect taxes from the rich? I actually don't know, because just about every individual change that I've read about can at least be partially defeated, somewhat mitigated. And even if not, people always can abandon the US or whatever country has the tax and go elsewhere. Now, it's not that easy to do in the United States. You may have to renounce your citizenship in the United States to avoid taxation in the United States if you're a citizen. But let's talk about what might actually work. My conclusion, after studying this for a very long time, is if you really want to collect taxes from the rich, you and other countries need to basically take an all of the above approach to make it really difficult to avoid taxation. It's not even going to be impossible, but you've got to start calling people's bluff about leaving the country, for example. I think that that's what it would take. So you've got to raise the top marginal tax rate on income. You've got to tax capital gains as income. You've got to eliminate the stepped up basis for the estate tax. I've talked about it before. I'm not going to explain it in this segment, but I have segments on it. You've got to put in a more aggressive alternative minimum tax for higher earners. You've got to do it all together and say, listen, if you really want to avoid this stuff, you'll have to leave. And maybe other countries will do the same thing, by the way. So then where are you leaving to? And most people aren't actually going to abandon their country, in this case, the United States. And you're going to be able to pick up some taxes from all of these different things. I don't think there's really any other way to reliably collect taxes from the rich. I understand passing policy that targets the rich, but actually collecting is the difficult part. If you have a better idea, let me know, but I think that that's what it would take. Reminder, we are 6 days from the David Pakman Show live town hall. This will be streaming live Tuesday, October 19th, 6 p.m. Eastern. We'll open up the phone lines for a while. We will be streaming live only on the David Pakman Show second channel called Pakman Live. You can find it at youtube.com/PakmanLive.